So the problem is a mortgage company will not lend on that. Now what happens to the owners? The guy that paid $3 million for this unit, and I was doing a little research today online at prices, showing how people were started at one number and the prices have dropped. They're going to be lucky if they can get their money out, yet alone even sell the unit. Would I want to build it? Buy it, I'm sorry? No. Now they're also talking, if you read about it, to repair this situation and replace the foundation, which blows me away. I don't know how they would do it. $500 to $750 million just to do the repairs. That is more than the building cost. Now the question is, and lawyers out there, I'm sure you realize, litigation, nobody wants to pay for it. Insurance companies who probably had a lot of coverage, their policies don't go up that high. You know, a construction company might have $50 million or $100 million in these situations, but it's not enough. Now, it's interesting, too. Again, I want everybody to Google this and read these stories. They're blaming, there's a building going up, which will be the tallest building in San Francisco called the Salesforce, like, you know, salesforce.com type thing, where they have a building there, and they're basically, which is next door, they're blaming them, saying that they disrupted the water table underneath. So now we're going to have the blame game and see who's at fault. And at the end of the day, who's the losers? The homeowners in this situation. And what's going to happen is we might see a lot of defaults on the loans. These places might become, you know, so upside down on what they owe that people might just be so disgusted with it and basically, kind of like in 07 and 08, just quit paying their mortgage and get foreclosed on. But what's going to happen when you do that? It's going to mess up your credit report. So it's, you know, it's not good to do that because it will affect your credit score, and it's a mess. And I really feel bad for those people out there that have this situation. So I want to go to another presentation, but let's take our first call. It's not our first, our second call. Hello, caller.
Hi, thanks for taking my question. I'm going through a divorce. Is that something that I have to put in terms of the divorce settlement as far as credit cards that was shared between me and my ex?
Is that what you're going to have to put in your divorce settlement?
Mm-hmm.
Well, more importantly, who's going to be liable to pay them? Let me ask you that.
That's actually what I'm calling about.
Well,
Would
are
it
you using
split?
a attorney to?
Yes.
I'm sorry?
Yes.
So what you need to do is discuss with the attorney. Are you paying on these bills now, either of you?
Yes.
Okay. You know, again, a lot of times the attorneys might tell you, oh, don't pay that bill because it's going to, you know, you don't want to pay the wife's bill or this or that. But at the end of the day, you've got to remember, if you don't pay these bills or whatever, it's going to mess up your personal credit. And then once you know, get fully divorced and everything, and you try to, you know, lease an apartment or whatever it might be, you're going to have difficulties. So, you know, you got to come to mutual terms with the attorney. And again, I'm not a divorce attorney, but I would just imagine you, at the end of the day, I know that bills need to be paid. How much debt are we talking, would you say?
Not that much. Like $600.
Oh, $600. Pay it. Just one of you pay
Okay.
it, split it. Just pay it, collect it from her. Is it worth $600 to mess up your credit? Absolutely not. So my suggestion is like that. But I see a lot of times where we're talking thousands of dollars on credit, and they don't pay it because one attorney told them not to pay it. And bottom line is it messes up the credit report. But well, I wish you the best of luck. I really appreciate the call. And if you need any help, be sure to give us a call at the Help Center. We can point you in the right directions and go from there. But thank you for the call.
All right, thank you.
No problem. So let's go to a couple little things that I'd like to review with people. You know, what is a credit report? Again, a credit report is a detailed report of an individual's credit history. It's prepared by a credit bureau. There's the 3 bureaus out there, used by a lender to determine a loan applicant's credit worthiness. Bottom line, the ability to pay back. So what is on a credit report? Real simple. Personal data, meaning your name, social, no, not social, name, address, phone numbers, previous addresses, work, where you've worked, and a lot of times, you know, you can get that stuff off as well. And if you want to get that stuff clean, give us a call and I'll explain how to do it. Number 2, a summary of the credit history. So that is going to basically list out all your creditors, Citibank, Macy's, your car loans, your mortgages, whatever they might be, plus any derogatory information, judgments, tax liens, collections. All that stuff is going to show up on your credit report. Again, when that negative information shows up on the credit report, what's it going to do? It's going to lower your score. Remember, keep those balances on open credit, 30% of the credit limit. If it's a $1,000 credit limit, every time you go over $300, that will lower your credit score. So again, try to keep that in line. And remember, the credit bureaus are 30, 60 days behind. So I get people all the time who think, oh, well, you're high on this credit card. Well, I paid it off a week ago. But it could take 30 to 60 days to get caught up on this. So if you're looking to purchase a home, 60 days out before you start doing that mortgage, make sure that stuff is paid down below 30%. Detailed account information, again, your payment history, you pay on time, it gets detailed every month, plus balances, credit limits. So it's going to show all that information. Number 4, inquiries. What's an inquiry? Well, every time you go to look for credit, car dealers, credit cards, whatever it might be, they pull a credit report. That goes on your credit report. There's 3 types of inquiries. That goes as the hard inquiry. What does that do to your score? It does lower it a couple points. The other type of inquiry is an account review, where creditors that have open credit with, they will review your credit and make sure that there's no issues. If they start seeing other problems with other cards, you're not paying them, they get nervous. They either lower your credit balance, your limit, or they might even cut you off. And then there's promotional inquiries. So the promotional and the review ones do not hurt you. Promotional ones, geez, how did I get this application in the mail? Well, the big banks or go to the credit bureaus and say, well, we want a list of people with credit scores of 650 and above. Basically that's what it is. So that's what they're looking at on the 3 credit inquiries. And again, details of negative credit information, which we discussed, late payments, judgments, tax liens, charge-offs, P&Ls, they call it all different stuff. That's why you need to check your report. If you need to get that off, do it quick. We have time for one more caller. Hello, caller.
Hi, I noticed you were talking about inquiries. How long does it usually last on your report?
Inquiries last for 2 years. So that is one good thing versus negative information, which lasts for 7 years. Now, if you file a bankruptcy, anything under that is going to last for 10 years. So, yes, 2 years on inquiries. But again, we talk about this all the time as well. When you go to car dealerships, tell them, especially if you have good credit, I only want you to send my application out to one company. And usually, if it's a new car dealership, whatever brand of car it is, they're going to have their own finance division. So if I go to buy or lease a car myself, I say send it to Honda Financial, whoever it is. I don't want it sent to all these different banks, because usually the company that the car is going to give you the best rate anyways. And usually they shop it around because they will make money on it. And even if it's a better rate for you, they might give you the higher rate because they make more money on it. So you do have to be careful. So I think we only have about a minute more or so. Let me just go to a couple, one little graph here, which I like to talk about credit scores and how they're calculated. So let me zoom in a little bit so everybody can see this. So again, payment history is huge, 35%. Length of credit is about 15%. Amounts owed, 30%. So again, payment history and amounts owed. So if you go over 30% of your credit limit, that is going to definitely hurt you. We are out of time, and I really want to thank everybody for watching the show tonight. I hope everybody had a great solar eclipse. Next one's in 2024, but it's not going to go across the country like this one. So we will be back next Tuesday night. I think we have Dennis Thompson on. He has been in the car finance business forever and car sales. So he's going to come and explain how credit affects you when you purchase a car. We'll see you next Tuesday, 6 p.m., Channel 21. Thanks.